We can know whether it's likely or it's a high probability that buyers are coming in. We can never know for sure. But we can line up signs that will tell us whether or not it's more likely than not that buyers are coming in. So we've got the structure. We can see a practical demonstration of the supply and demand, supply on this side, demand on this side. You have a literal shift in thinking over the span of several hours from one of selling to one of buying, from one of supply to one of demand, and that simply gets expressed in the chart. And what we're going to see is this long spike. That's what he's asking. Do these spikes indicate people getting back into long positions? And I would say, well, it's likely. So let's line all of this up, if we can. From a practical standpoint, if you think about it, in the Forex market, there are really only two times that everyone on planet Earth has to abide by. That's the Friday open and the Friday close and the Sunday open. So when you're looking at a weekly chart, and this is why I refer to the weekly chart and why I keep coming back to the weekly chart, because I know that this is something everyone has to look at and everyone has to abide by. The daily chart over here, it closes at 5 p.m. There are some traders who have their bars closing at midnight. There are some traders who have their bars closing at 12:30 p.m. Eastern Time. So these breaks from open to close on a daily chart are completely made up, and they're completely arbitrary, and I have no idea how many traders are actually looking at the same thing I am. This, on the other hand, I know they're all looking at, because they have to. What does that mean? What's the point of all that? Am I just blowing hot air or what? Well, what it means is this Friday close is very, very important. Why? Well, think about it. Because during this week, traders said there's no way on earth that pounds are worth that much. But then they also came in and said, well, you know what? They're not worth less than that either. So what they're saying, basically, is pounds are worth somewhere in between these numbers. Now, the reason why I look at this, and I gave you the example the way I did, was because the market actually pulled up off of the low. Okay, so what that tells me is traders were not convinced enough during this week to keep on. They weren't convinced that there was enough bearishness. They weren't convinced that there was enough supply. They weren't convinced that the dollar was weak enough to continue selling. And they actually bought near the end of the week. How do I know that? Well, I know that because price closed off of the weekly low. And you can see that happens actually right here. Price comes down, bounces up. Comes down, bounces up. That's what happened. There's the close of the week. Here, right here is the close. Right on this bar. So you can see that they did buy. They bought near the end of, in the very last few hours of Friday. Traders were pushing their position up, and who cares why? Who cares if they're trying to book profits or if they're, you can come up with a million different reasons. Who cares? All that matters is that price moved up. So that means that the bearishness, it let up a bit, didn't it? Now, I have seen weeks that close nearly to the tick on the low. That means that people were just bearish from Monday to Friday, man. They just pushed price down. That was not the case here. So that means that this close and this low are going to be significant for me. What I want to see is if price does trade below these lows and then it comes back above them, what that tells me is it's likely that selling has ended. Now let's go back to some more concepts here. And this one is pretty simple. If you have $1 billion, okay? 1 billion with a B, okay? And you put into the market